Ever wondered which ETF performs better, QQQ or VOO? Welcome to the world of exchange-traded funds or ETFs, a place where investors find a convenient way to diversify their portfolios and gain exposure to a wide range of assets. Today, we're focusing our lens on two heavyweight contenders in the ETF arena, the Vanguard S&P 500 ETF, also known as VOO, and the Invesco QQQ Trust, commonly referred to as QQQ. VOO aims to track the performance of the S&P 500 Index, encompassing 500 of the largest publicly traded companies in the United States. On the other hand, QQQ seeks to mirror the performance of the NASDAQ-100 Index, composed of 100 of the largest non-financial companies listed on the NASDAQ stock exchange, with a particular emphasis on the technology sector. So, how do these two ETFs stack up against each other? Let's dig deeper into these two ETFs and understand their performance metrics. Subscribe for more content and comment on what other deep dives you would like to see in the future. With that out of the way, first up, we have the Vanguard S&P 500 ETF or VOO. This powerhouse of a fund aims to track the performance of the S&P 500 Index, a collection of 500 of the largest publicly traded companies in the United States. Now, what does this mean for an investor who initially invested $10,000? Well, after a certain period, this investment would have ballooned to a whopping $49,344. This represents a compound annual growth rate, or CAGR, of 12.98% over the past 12 years. But what about volatility? The standard deviation, which measures return volatility, is recorded at 14.44%. The best performing year for VOO saw a growth of 32.39%, while the worst year experienced a decline of 18.19%. The maximum loss from a peak to a trough, also known as the max drawdown, is calculated at negative 23.91%. Now let's talk about risk-adjusted returns. The Sharpe ratio, a measure of this, stands at 0.85. The Sortino ratio, which places more emphasis on downside risk, comes in at 1.35. Finally, let's consider the market correlation of this ETF. With a correlation of 1.00, VOO has a strong correlation with the overall market. This means that it generally moves in lockstep with the market, making it a good representation of the broader US stock market. That sums up the key points for VOO. But how does it compare to QQQ? Next, let's turn our attention to the Invesco QQQ Trust, or QQQ. This exchange-traded fund, or ETF, is designed to mirror the performance of the NASDAQ-100 Index. This index comprises 100 of the largest non-financial companies listed on the NASDAQ stock exchange, with a heavy emphasis on the technology sector. Now, let's talk numbers. If we had invested $10,000 in QQQ at the same time as our VOO investment, we would now be looking at a balance of $86,350. This represents a compound annual growth rate, or CAGR, of 17.91%, indicating a higher rate of growth than VOO. Of course, with high returns often comes high volatility, and QQQ is no exception, with a standard deviation of 17.33%. Looking at the best and worst years for QQQ, we see high highs and low lows. The best performing year saw a growth of 54.85%, while the worst year experienced a decline of 32.58%. This gives us a maximum drawdown, or the maximum loss from a peak to a trough, of negative 32.58%. Let's now consider some key metrics. The Sharpe ratio, which measures the performance of an investment compared to a risk-free asset after adjusting for its risk, stands at 0.99 for QQQ. This suggests that QQQ provides good risk-adjusted returns. The Sortino ratio, which emphasizes downside risk, is 1.67, indicating that QQQ has favorable performance when considering downside risk. Lastly, the market correlation is slightly lower at 0.91, indicating a strong correlation with the market, but with some differences in performance. With these key points in mind, let's see how VOO and QQQ stack up against each other. Now, it's time to put VOO and QQQ head-to-head. At a glance, VOO tracks the S&P 500 Index, consisting of 500 of the largest US companies. On the other hand, QQQ mirrors the NASDAQ-100 Index, comprising of the 100 largest non-financial companies on the NASDAQ exchange, with a heavy tilt towards the technology sector. When we look at the historical performance, QQQ comes out ahead with a compound annual growth rate of 17.91%, compared to VOO's 12.98%. However, this higher return comes with a slightly higher level of risk, as indicated by a higher standard deviation for QQQ. Let's turn our attention to the expense ratios. VOO has an incredibly low expense ratio of 0.03%, while QQQ's expense ratio is a bit higher at 0.2%. If dividends are important to you, VOO has a higher dividend yield of 1.38% compared to QQQ's yield of 0.68%. In terms of risk-adjusted returns, QQQ boasts a higher Sharpe ratio and Sortino ratio, suggesting a better performance per unit of risk. However, VOO's market correlation of 1.00 suggests a closer alignment with the overall market performance. As you can see, while both ETFs have their strengths, your choice between VOO and QQQ will ultimately depend on your individual investment goals and risk tolerance. So, that's a wrap on our comparison of VOO and QQQ. We've delved into the nitty-gritty of these two ETFs, highlighting their differing performances, risk profiles, and sector compositions, whether it's VOO's lower volatility and higher dividend yield, or QQQ's remarkable growth potential and tech-centric focus that appeals to you. Remember to weigh these aspects against your individual financial objectives and risk comfort level. Remember, the best investment for you depends on your personal financial goals and risk tolerance. Happy investing!